All right, welcome back. If you just joined us, it is still today's business, and our focus right now will be on the Finance Act 2021. Now, on 31st December 2021, the Finance Act 2021 was signed into law by President Muhammadu Buhari. Over the last 3 fiscal years, the federal government has consistently ensured the review of the tax and fiscal regulations via annual finance acts. The Finance Act 2021 amends 13 different tax and fiscal legislations and was enacted in accordance with Nigeria's macroeconomic policy reforms and to stimulate revenue mobilization for the purpose of budget implementation. Now, joining us to make sense of all of these tax conversation is none other than is a tax expert. Is Olakpoju Bamidele, managing partner, Boju Professional Services. So good to have you join us on the show, Mr. Boju.
Thank you. Good.
Fantastic. I'm a lot more concerned around the changes from the Finance Act 2020 and 2021. Give us a rundown of what you think the changes are from 2020 to 2021.
Okay, thank you so much for having me. There are a number of changes between 2020 and 2021 Finance Act. For 2020, we have about 81 amendments.
Yes.
Now we have 39 sections amended.
Wow.
So, and there are a few things that are connected between 2020 and 2020. One of them is the minimum tax. Minimum tax was slashed by 50%. Instead of 0.5, we have to do 0.25. So because there were problems with that, in the way the law was drafted, there was error. So this time around.
So is as an improvement of in every year,
yes.
The tax law is often being improved upon.
Yes. This just started under this administration.
Yes.
With the first one was 2019, 2020 and 2021. But prior to 2019, it was 20 years earlier that we had the last amendments. So this one is also a very significant changes to what we have in 2020.
Let's look at a few key changes that are highlighted here under the Stamp Duty Act, Educational Trust Fund Act, Excise Duty Act, Personal Income Tax, and the VAT Act. These are all acts that directly affect the regular man on the street. Yes, give us the highlights.
Okay, so for the tariff, custom excise tariff, we call it SETA.
Yes.
So for this one, there is an amendment, just one, and that has to do with beverages, and beverages, and they will now be charged to excise duty of 10 naira per liter.
Okay.
Before now, for alcoholic drinks and cigarettes, their wine and spirit, they usually have their own tariff. Yeah. But government has brought, beverages, into the bracket now. So if you are drinking per liter, there's a 10 naira excise tariff on it.
That doesn't sound like good news for alcoholics. So if you are drinking, you're paying tax on alcohol, on beverages right now.
Yes, and that could affect the pricing, going forward.
Yes.
And the reason given is that government are concerned about the health exposures, exposures to risk, diabetes and the rest that citizens might have. So they want to help discourage it a bit.
So that increasing the taxing on beverages would reduce the interest in taking alcohol. Is that government's logic?
Yes.
That logic does not work.
I know, but tax is also a control mechanism that is used when government want to discourage certain things or encourage certain. If they want to discourage, they increase the rate. If they want to discourage, they bring down the rate.
Okay, let's begin to look at what we can gain as citizens, talking about this newly introduced taxes. Nigerian Police Trust Levy, National Agency for Science and Engineering Infrastructure. These are a few taxes I've never heard about before, but here we are, 2021.
Yes. These are what we call earmark taxes. So when you have taxes that are targeted towards a particular cause, we call it earmarked or special taxes. So now, when you talk of Police Trust Fund, that act has been enacted since 2019.
Yes.
Only that was not active. Now it's going to be administered. And the thing is this, government want to take 0.005% of the net profit of, all companies, as levy, for police levy, just to fund, because of the security situations in the country, they want to improve it. So that's the purpose. So that every company pays 0.005% of their net profit. But the question here is it net profit before tax or net profit after tax? So that is what we need further clarification on. Then when it comes to NASENI, National Agency for Science and Engineering Infrastructure, that one has been enacted since 1992, but it was never administered. Now this is the time to administer it, and they are saying 0.25% of profit before tax of certain companies in certain industry, banking, mobile telecommunication, ICT, maritime, oil and gas sector, they will all be paying. And the exception here is if you're a small business in those industries, you will not pay. Yeah. But the downside of it...
How do we define small business in this context?
Yeah, in this context, a small business is a business whose turnover is less than 25 million. The threshold is 25 million.
25 million. Okay.
So and now, but the thing here is this, as far as I'm concerned, this is a duplicate tax. Because for certain company industry like mobile telecommunication and ICT, they're already paying what they call an NITDA before now. So this one is coming on them again as a special, tax. So it's been there, and that will be double taxation.
How much of a disincentive could that be for investors?
Well, that will not be an incentive.
Yes.
That will be a disincentive, so to say. Yes. That's not an incentive because you have to pay more taxes.
And so, by implication, we are looking at an economy that is trying to show up revenue. We're looking at an economy that's trying to attract investors, both local and domestic investors. How does this level of taxation promote that initiative of government? Or do you think is a misplaced policy?
I would like to stay in the middle. Why? Because if you look at Nigeria, the government is looking for money at all costs from every source. So moving away from oil and looking at non-oil income revenue. So you can't justify them to say that, well, they are looking for more money. Okay, but on the other side, for investors to come in, before investors come into a country or they put in their money, they look at regulatory environment.
Yes.
They look at taxes is one of them they have to consider. You understand? Their entrance and their exit from the economy, from the country. So as far as I'm concerned, all these loads of taxes coming on private sector or formal sector is a lot of a disincentive than benefit. One too many.
Fantastic. Let's look at this one in terms of managing public debts. What are the new measures you think is being put in place to manage public debts and their possible implications?
Okay, now from the act, I think it's fiscal act now. Government is looking at number one, want to control the level of debt, because if you look at the debt ratio now, it's so high.
Yeah,
they are trying to control it. So they are now saying, for any government at any level, whether federal, state, or local government, to go for any debt, there are three things you must consider. One of them is capital project. It's going to be spent on capital project. The second one is significant reform that will have national impact. Even that one is not well defined. We don't know the definition. The third one is human development. And as far as I'm concerned, that word is bogus. Human development. Are we talking of training? So do you want to take money to do training or what? I don't understand that. That's one of the measures they are put in place. And they're also looking at taking loans at a very reasonable cost.
Interest rate, yeah.
So that might affect investors that invest in bonds and government bonds and the rest, because government is looking for a kind of fund that will give them the least cost of capital as much as possible.
All of this is coming at a time where experts are clamoring for increasing the tax net as against overburden or multiple taxation.
Yes.
Why do you think government is not seeing it from that perspective, or is it because of is it a function of a non-productive system? Because you are able to increase taxes on a productive system. But here we are as a people, we are increasing taxes, and the productivity of the economy is pretty low. Where do we miss this balance in here?
As far as I'm concerned, it's a lazy approach. I'll call it a lazy approach because, all these taxes that are being increased, the focus is on private sector, organized formal sector.
Yeah.
Because if they look for you, you have a location, you have an office, it might be threatening that your office will be locked down and the rest. But the informal sector, the mama lodger, the one that sell, and some of them have a lot of cash. they have not been able to unravel that mystery. So a lot more work have to be done to be able to reach, you know, the unreached, so to say.
Or better still, the unbanked.
The unbanked, just like the way they, you know. So, but a lot of incentive has to be put in place. And also government needs to show a lot of accountability. Because all this money they are taking, if they plow it back and infrastructure develop, I don't need to pay school fees on my children anymore, all those things, then people will be willing, because there will be a lot of voluntary compliance. Because I will tell you this, you know, there's what we used to call tax to GDP ratio, and which has always been an issue. The recent one for Nigeria is 6%.
Wow, that's pretty low.
It's pretty low. And the recommended rate is around 12.something%.
Yeah.
You know, the highest one is for Denmark has about 46 or 48%. Yeah, tax to GDP, you know, ratio. But you look at Nigeria, because I like to be practical this afternoon. Now, when you look at, I believe there are two forms of taxes. You know, there's this one that comes by the law, and the one you call implicit tax. Yeah. I dig my own borehole. I pay myself, you know, through school, whether by loan or by anything. I construct my estate through by myself. You know, you are just become a government.
You run your house with generator
all through,
every day.
All through. So people are not feeling government. Businesses are not feeling them. So by that, they're already paying tax. That's what we call implicit tax. They're already paying, even though not formal. But they're already helping government to do their job. Security, you have to pay for security. You're already helping government to do their job. So if government can become more accountable, you know, and people see what they use the money for, there will be voluntary compliance. And you can do a mix of, you know, slightly increasing the rate, slightly, then reaching the unreached by expanding, you know, the cash base. But
you know, whether we like it or yes, it's already an act.
Yes.
I mean, you can contest it somewhat, but not everybody have the wherewithal to want to contest this.
Yes.
Now, what would be your advice to taxpayers going forward, looking at all the amendments that have been done and review that has been done on the Finance Act 2021? What would be your advice and the impact on from the Finance Act on taxpayers?
Okay, now, you know, government has more to gain on this Finance Act. If you ask me for the ratio, I would say government will have more than 90%, because just very few incentives for taxpayers. Government is generating more money. So I want to say to taxpayers, especially the organized sector, they have to be much more aware, you know, public awareness when a bill is going through process in National Assembly.
To get involved.
So get involved and have representation. So by that, because some of these double taxation coming up now, when they are doing that public, you know, the hearing, some of the industry players that are concerned, they are not there. If they have strong representation, they will have made their own contribution. It will have helped a lot. So another one that I want to say is, because in this new, you know, finance year now, government will be using their technology to pick information, you know, gather information from taxpayers. I want to advise that they should know how to keep their records well. Proper record keeping with documentations backed up. So.
Okay. Oh, okay. So that's it. That's it. Anyway, it's a fantastic conversation. I'm sure taxpayers have heard. You need to get involved in decision making when it comes to issues around taxes and how it concerns you. And then you know, proper documentation, proper account keeping is another way to go in ensuring that you stay relevant in the system. Thank you so very much, Akpoju Bamidele, who is a tax expert, and he is managing partner at Akpoju Professional Services. It's called PPS. A fantastic time with you on the show. We look forward to having you again on the show discussing tax matters and other matters. Thank you so very much.
It will be my pleasure. Thanks so much. God bless.
All right, that's where we call it a day with Jordan Courtin on the show today. Today's business will come your way again Monday, God willing, from all of us here. Do have yourself a profitable business day. Stay safe. COVID-19 is still here. I am David Obabadike. Have a great day and bye for now.